This is the FCTO Daily Forex News Report for the 10th of May 2013. The Japanese yen was sold off broadly and weakness carried on to the Asian session. US dollar Japanese yen finally broke through the 100 psychological level for the first time in 4 years, whilst the euro Japanese yen also took out recent resistance at 131.72. Data from Japan saw investors buy a net total of 514 billion Japanese yen in foreign bonds in the weeks up to last Friday. Note that Japanese investors had been net sellers of foreign bonds most of this year. And the data argues that recent massive monetary easing is pushing Japanese to invest abroad. Other data from Japan saw current account surplus come in narrower than expected at 0.34 trillion Japanese yen. EcoWatch current gauge dropped to 56.5 in April. Technically, the US dollar Japanese yen, euro Japanese yen, British pound Japanese yen, and Canadian dollar Japanese yen have resumed the recent uptrend and would expect more broad-based selling in the yen in the near term. Another development to note was the weakness in the Aussie. Australian dollar US dollar dropped through an important support at 1.0115 and is now heading back to parity. Famous investor Stanley Druckenmiller was quoted saying the Aussie will come down hard. Earlier this week it's reported that George Soros is behind a $1 billion US bet that the Reserve Bank of Australia could cut rates this week. Meanwhile, in the quarterly economic statement, the RBA lowered the inflation forecast to 2.25% by the end of this year, down from the prior projection of 2.5%. Growth is projected to be at a sluggish 2.5% and stay below trend. The central bank said that the outlook for non-mining business investments remains relatively weak over the next few months, and the approaching peak in resource investments, the high level of the Australian dollar, and ongoing fiscal consolidations are all likely to weigh on growth over the next year or so. In the US, yesterday's jobless claims data raised speculation that the Fed could taper quantitative easing measures earlier than expected. Comments from Fed officials delivered mixed messages on the issue. Philly Fed President Plosser reaffirmed his hawkish view that quantitative easing should be slowed as it has contributed little to boosting the job market. Yet the Chicago Fed Evans affirmed that during the time that we've been doing our asset purchase program, the labor market has definitely improved, and he would like to see sustainable improvements in the labor market throughout the summer. Looking ahead, the UK will release trade balance in the European session, and Canadian employment data will be the main focus in the US session. The Canadian job market is expected to grow 13,500 in April, with the unemployment rate to be unchanged at 7.2%. Fed Chairman Ben Bernanke will speak at a Chicago Fed conference on monitoring finance, and over the weekend G7 finance ministers and central bank governors will meet in London. For all the news affecting the Forex market throughout the day, join us at forexcurrencytradingonline.co.uk. That's forexcurrencytradingonline.co.uk.